All right, techies and scientists, welcome back. Last week, we have a very good, eventful week. So now we're taking a look at the economic calendar. We had the CPI on Tuesday at 8:30 a.m. It was very good news. We also had the PPI on Wednesday, and we had some fireworks again on Friday. But the CPI, this is probably the most eventful one. We had big numbers. I mean, I don't know what the numbers mean exactly. I don't know if the CPI went up, if the numbers went down. Quite frankly, I don't care. I don't give a damn. But at the end of the day, what I saw on the chart is price went up, and I was able to take advantage of the situation. It was a couple few short trades, and I was able to take it down to the 15 seconds time frame to be able to form some trade. So now I know I keep mentioning the 15-second time frame like it's something I discovered. I would like to say no, not really. I've been trading the 15-second time trade, but it's just I haven't made it very popular here on this channel. But it is definitely a time frame that I use. Okay, so at some point in the future, I will create a video about how I trade the 15 seconds time trade. But it is definitely a good tool to use. I'll dive that in a little bit later. But yeah, let's go back to the economic calendar here to see what we had going on this last week. Yeah, so there was a bit less delayed data. So it seems like things are starting to slowly come back online. We had a lot of Fed speeches. And again, I know I promised that I will kind of take a deep dive into what the Fed speech mean, especially going way back in 2000, how speeches that they made back in 2000 is affecting us today, where the Fed did not want the economy to hit the low bound of zero, where to the point they have to go into a depression. I think all the Fed's worst fear is depression. They want to keep things elevated at a higher price at all time. So all this inflation that you're experiencing, all this market price going up, all this melt up, it wasn't by accident. It's something that's been in the work for a long time, and something that you may be coming to see in the future is probably negative interest rate. That's gonna be one of the last weapon that they're going to use. Yeah, this is a whole new can of worm. This is probably beyond the scope of this channel. But negative interest rate is something they are actually actively exploring, if not they already explored before. And they've done some beta test run back in 2020. Yeah, so that's in the work for them. Besides that, let's move on into next week. But what's going to come up next week? So next week, Monday, we have a bank holiday. It's going to be pretty much quiet for next week. Not much going on. So we have the World Economic Forum, the annual World Economic Forum coming up next week. I believe that's in Davos. It more or less affect your trade, but you do want to know what they're talking about, what direction the elite is trying to take the world, and how you can best prepare yourself and to kind of like remind you why we are trading, right? Because trading kind of go way beyond what's on the chart. It's about not just taking profit and make money, but also once you get that profit, what else you do with it, right? And how you can best deploy it, to position yourself in the future to buy more assets, or to increase your self worth. So that's one thing to keep an eye for. I'm not sure if that's gonna cause a lot of whipsaw. I don't think so. I know Jackson Hole, when the Feds are doing Jackson Hole, I think that's like around August in the summer. I know that create a lot of whipsaw. I don't think the World Economic Forum will create a lot of whipsaw in the market. It's going to be very quiet for this week. So that's what I would kind of like watch out and look out for. So let's take a look at the seasonal tendencies. So it seems like it's kind of like on par with what's going on. So it's up and down, kind of slowly climbing up a ladder until it peak like right around mid February, and then seasonally and historically, it will be like a sharp decline. Um, I don't know what will be the catalyst for that sharp decline this year, so I guess we'll have to wait and see. So my thing is, when it comes to trading, we'll just take it a week at a time, a month at a time, pretty much, and a day at a time. At least, especially when you're a new trader, when you're trying to predict things way down the line, like 6 months down later, you can get caught up in the weeds, and then make some a false move, or you get scared of the market, and then you make an adverse decision in your trading. So be careful with that. So it seems like yeah, starting this week, it was started high, had a drop. I believe that low was created on Wednesday, and then now it kind of bounced back up a little bit on Friday and kind of like hovering around. So we'll take a deeper dive on that chart a little bit later and see what that means. So historically, kind of like taking a look at this when the market opened on Sunday or maybe on Tuesday. For me, I'll probably will start trading on Tuesday. I will avoid trading on Monday whatsoever, whether the market is open or not. So what we're anticipating to see is price to kind of do a little bit bounce back up on the 19th, which is Martin Luther King's Day, and kind of go up historically, and then kind of go sideways on the 21st, make it high, and then kind of drop again, like around the 26th, which is the following week after. Um, Talking about the following week, we have some interesting thing going on. Not next week, but the following week. We have a lot of earnings coming up. So when we come to that, maybe on Sunday the 24th, I will crack out a video on that and kind of like what we need to watch out for. Because it seems like we may be in an AI bubble. So it's just like I'm just anxious and standing on the side and waiting for the shoe to drop. But at the same time, I mean those things where I'm talking about the seven, the magnificent seven, they propped up the economy so up. I mean they're so ingrained into the economy. You have seven stocks that I think it's about 20% of the total market is pulling up, like it's 20 to 21% of the market is like concentrated in all seven stocks. So it's kind of hard for me to see that they are going to pop that AI bubble. so I'll be watching out for that week, not next week, but the following week. But what I'm trying to say is, before I even get to that, is that week on the 19th, from the 19th to the 23rd, is gonna set a precursor to what's going to happen the following week after. Okay, so that's what we had going on there. So let's take a deeper dive on the chart. So, like I mentioned earlier, we have price open up on Sunday, and Sunday right here, kind of gap up and then drop, and then kind of trade around a little bit, made a new high on Tuesday, and then make a low on Wednesday. So to me, when I'm looking at this is a classic pattern of a bullish market. Make a low on Tuesday and Wednesday, and then kind of like rally back up. So I'm not saying that the market is gonna spike up for next week or going up for next week, but this is to me the classic pattern of a bullish market. But again, that doesn't mean there cannot be any action on the downside. Um, but it's just what I've been seeing. That's usually what I see as far as the tendency is concerned. So let me take a look at. Actually, before we can navigate away from that, let's take a deeper dive on this one right here in this area. So when I come in on Sunday, I usually create this chart right here, and whenever there's a gap open, I highlight those gap, and I kind of like extend it all into infinity, indefinitely, in perpetuity. And as you can see, that Wednesday, that low was created not only on on the new week opening gap and then kind of touch it, kiss it a little bit, and then turn around. But it also trade back up again to the newly week opening gap that was on January 11th. Okay, so it kind of like traded from one new week opening gap to another new week opening gap, And then I mean, it's not coincidence. I mean, look at it. It's just kind of like wick into it. They tried. All the bodies stay like really below the half of that new wick opening gap, and then it kept going lower from there. So that the $1 million question is, so what's going to happen next week? What's going to happen on Sunday? Now, typically, what usually happen, um, when you see it kind of like touch or kiss like this in New York opening gap, he has a tendency to come back to it again and kind of like dig into it a little bit lower. So if you see the market open on Sunday, or you see during the London session, price kind of like gap up and went up and then start sliding down, you can bet your bottom dollar if it start going lower than this lows here, it is going to target this new opening gap at 25,431. Again, what I'm saying is you may see price open, clear out these high right here. It's gonna open up, clear out those high right here, and then come back. So let me take a cleaner chart right here. Maybe that'll make a lot more sense. Okay, so price may open up, clear out those high right here, and if it start going lower than 25,589, let me see, it has to go lower than 25,589. When it start going lower than that, then there's a high probability it's gonna aim for these down low here as well. So what I'm saying is, you can kind of start going short from 25,562, and you can aim to get out at 25,465. Like it's not a bad of a trade, right? About 100 points or so. So that's why I would aim for. It doesn't seem like there's a breaker here, but I think it's just gonna come down to the level of 25,579, take a break, come back up, and then dive lower again. Now, if it goes below this, then we know it's gonna keep going lower and lower. I don't think it will, but we'll have to wait and see. I think price is mostly gonna go sideways. Um, and then when we have the week on the 20th, and I'm talking about this week right here, when we get to the week of the 25th, that's when we may see a lot of movement, which is what I'm saying is, price may start retracing lower and lower throughout this week of the 18th to the 23rd. And then when we have the news report and we have Apple reporting and everything, price may end up going higher and higher and aim for those high right here. I mean, this area, these levels here, 26,000. I mean, it's rich. I mean, it's ready to be ripped at some point. The $1 million question is, when is it gonna do it? I don't know, but it'll have to take a strong catalyst. It'll have to be like a good report, and like those markets are gonna have to beat earnings and expectation, for it to beat up. So it's not gonna happen this week. I'll be shocked if price go up and clear out these highs this week coming up, but I'm definitely anticipate it may do that the following week. So with that being said, um, I'll say be careful out there. Happy trading. Don't wreck yourself. Don't over leverage next week. It's gonna be mostly quiet. So with that being said, happy trading, and I hope you have a nice day.